Gold managed to move in positive territory in the previous week, rebounding from a 4-week losing streak. Yesterday, Monday the 23rd, gold jumped to a new weekly high price, reigniting further bullish expectations for the precious metal. In this report, we will carefully analyze and break down the most important information needed to trade the gold market carefully, including both technical and fundamental aspects. My name is Angelos Zitis, and this is the IronFX Gold Report for the 24th of May. In the second half of May, the USD index has been captured by some bearish tendencies. This may be a technical correction for the index, as it has been ascending for the past 6 consecutive weeks until the 8th of May. Yet traders may be content to observe the adverse relationship the metal keeps with the USD, as it could potentially support gold prices further. On a different note, a major subject that seems to counter the general investor confidence and at the same time lift economic risks supporting gold prices are the ongoing supply chain disruptions. COVID-19 restrictions in some parts of the world, along with the war in Ukraine, have kept this challenge alive in the medium to long term, putting limits on business activities, consequently and possibly affecting gold prices. In addition, the idea that some major economies might be heading into a recession is echoed more and more in the most recent weeks. Even though we might need actual figures to confirm for such a scenario, some economic slowdown has been observed in China, the UK, the US, and the Eurozone, increasing possibilities for solidifying the downturn. The economic releases in the following days are rather important, and traders should keep an eye on the new figures, as they could create volatility for gold. During the 25th of May, we get the FOMC minutes for its meeting in May. On the 26th of May, we get the highly important US GDP second estimate rate for Q1, along with the weekly initial jobless claims figure. On the 27th of May, we get the US consumption adjusted and core PCE price index rates both for April, along with the final University of Michigan consumer sentiment figure. Finally, on Monday the 31st, we get the noteworthy US consumer confidence figure for May. Moving now to our technical analysis, please note this is gold's 4-hour chart. Since the 16th of May, gold has managed to perform consecutive sessions upwards, turning previous resistances into support levels. If this trend continues, we might see the price action engaging the R1 1870 resistance level, which was used previously in the start of May. Above the R1, we see the price action moving into a range that was used for the most period towards the end of April and the beginning of May, which is highlighted with blue on our chart. On the other hand, if a trend to the downside prevails, we may see the S1 1845 support level being tested. Below the S1, we may see the price action falling into territory that was traded for 10 consecutive days in May, which has led to a momentary touch of the S3 1790 support level, which is also the lowest point gold has dropped since the start of the current year. Despite the recent upward movement, gold, in our opinion, remains in a selling momentum since the start of March. For us to change our current selling view to a buying one, we would like to see a clear testing of the R3 1920 barrier, setting it as a barometer for the strength of the bulls. Yet, on a 4-hour chart basis, the RSI indicator continues to move above 63, implying some bullish interest may be in play.